Good morning, good morning, good morning. It is Friday, the 28th of March. This is the morning blast for myself and Mr. Michael Brown. If I can try and add him very quickly. There we go. As usual, nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ or indeed the hosts, which is myself, Mr. Ryan Paisley, and indeed Mr. Michael Brown. How are you, Mr. Michael Brown?
Very good morning, Ryan. Good morning, everyone. I've got a bone to pick with you, actually, because you've spelt my bloody name wrong in the title of this thing this morning.
Oh, no, I've just put a capital I.
No, you've got the E and the A the wrong way round, more
Oh,
importantly
and
than
that. And that.
that.
In my defence, I did drink quite a lot last night.
Yes, well, I left at a very sensible 9 o'clock, and
I
I,
didn't.
I I think I put evens on you WhatsApping me to say you couldn't make it this morning. So yeah, well done for turning up at least.
Well, thanks. That was like a virtual tap on the head.
It really was, wasn't it?
What's happening? Please tell me what's been going on because I have no idea.
Well, do we need the disclaimer first of all?
I've already done it.
Oh, have you? Oh, right. That must have been when I was jumping in that case. So yes, we can crack on. Good morning, everybody. Happy Friday, and yes, for the benefit of
We've
Zach,
made it.
We have made it, and yes, for the benefit of Zach, I am sat here at home. So that's another skive and another black mark that goes against my name. In terms of markets yesterday, it was a little bit of a risk-averse day with the S&P 500 ending the day lower by around about a third of 1%, and we've seen further downside in futures on both sides of the Atlantic in early trade this morning, probably as a round of pre-weekend de-risking gets underway. And of course, as markets continue to move towards this Liberation Day next Wednesday on the 2nd of April. Trade elsewhere yesterday was somewhat choppy. We did see gains across the Treasury curve with the 2-year yield pulling back below 4% and the 10-year yield falling by around 4 basis points from where it was this time yesterday, now trading down to around 4.32%. The dollar broadly softer against most peers, although the G10FX market fundamentally remains range bound and somewhat listless. Cable firmer on the day yesterday, trading up to around 129.5. The euro, the mighty common currency,
Fuck off.
briefly trading above 108, but sadly those gains have rather fizzled out in early trade this
Yes.
morning, just like the chances of me getting a free lunch anytime soon. One thing that hasn't fizzled out, though, is the rally that we see in gold, with the yellow metal continuing to glisten and shine with fresh
Oh,
record highs printed overnight. We got up to a high of around $3,085 an ounce, and it certainly seems that the momentum is remaining firmly with the bulls on that front. In terms of catalysts from yesterday, a fair few things to get through this morning, which is probably just as well because I imagine Ryan doesn't have much on his list. In terms
whoa, whoa,
of,
whoa, 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 whoa! Why'd you say that?
well, I mean,
Well,
dare I? Do we need me to say why?
one, I don't create the list, and two, you know me, I'm a machine.
God, a very broken machine by the sounds of
Oh,
it, but
maybe,
we'll leave
maybe.
that there. In terms of scheduled events, yesterday we did have a policy decision out of Norway, with the Norges Bank holding rates steady at 4.5%, in line with consensus expectations and with money market pricing. The Norges Bank, though, did in their policy statement guide towards rates most likely being reduced in the course of 2025, with their forecasts consistent with rates being lowered to 4% by the end of the year. It does seem like there's a bit of a sort of unreliable boyfriend act going on in Norway, though, because in January they said that rates will probably be cut in March. We get to March and they hold rates steady and say rates will probably be cut at some point this year. I probably wouldn't be holding my breath and taking their guidance with
So,
too much seriousness at this
do I,
point.
do I not remember quite a shrewd operator on Twitter saying more than an unreliable boyfriend, it was an unbelievable boyfriend?
I don't know. I must have missed that.
I thought it was you that tweeted it. But it was you
No,
or Zach.
it definitely wasn't me. I
Oh,
did
okay.
tweet something about Carney yesterday, which I'll get onto momentarily.
Okay.
But yeah, that wasn't me. That little ditty. In terms of data releases yesterday, we did have figures out of the United States. Q4 GDP revised higher to 2.4% on an annualized quarter-on-quarter basis. That was up from the 2.3% that was the second estimate. Although the data is, of course, very stale at this moment in time. We also had the weekly jobless claims data. Initial claims at 224,000 in the week to the 22nd of March, pretty much unchanged. Continuing claims, though, they fell to 1.856 million from a prior 1.892. And of course, that continuing claims print does indeed coincide with the March non-farm payrolls survey week. In terms of other bits and bobs from yesterday, a few things on the trade front. This is where I'm going to talk about Mark Carney now, just for your benefit, Ryan. Reuters were reporting yesterday that Donald Trump and Mark Carney had spoken for the first time, only for 20 minutes later, Mark Carney to say, actually, no, we haven't spoken, which caused me to say, once an unreliable boyfriend, always an unreliable boyfriend, which I think is what you remembered. It does seem that that call is due to take place at some point today. So, of course, do have that on the radar. Carney's rhetoric on the trade front has been quite punchy recently, but
Yeah.
I'm sure he will be trying to forge, should we say, a more friendly relationship with Donald Trump than Justin Trudeau had, given that those two did not really see eye to eye on anything. The other thing that's of note on the trade front this morning is reporting by the FT. The European Union are reportedly looking to limit the fines that they're going to slap on both Apple and Meta. Effectively, this is kind of the opposite of what China are doing, whereby the EU are saying, actually, let's take a little bit more of a light touch approach to try and keep the US happy, whereas China are turning around and going, actually, let's make life as bloody awkward as we can for US businesses in order to piss them off even more. So a little bit of an interesting report by the FT there. A few other bits and bobs just worth covering off. We did hear from the BOE's DINGRA yesterday, of course, an external member of the Monetary Policy Committee. I'm going to quote from DINGRA here, and if anybody can actually explain what this means, then I'd be much obliged. DINGRA said at a conference yesterday, "We are still at orderly fragmentation at this point. There may be serious price pressures in disorderly fragmentation."
Oh, good.
I mean, it's clear as mud, that, to be completely honest, but somehow she will use that as an argument to vote for another rate cut at the next BOE meeting, as she is, of course, the most dovish member of the MPC. Other things worth mentioning: Australia, they are going to the polls on the 3rd of May. That was announced towards the back end of yesterday. Going to be quite a busy week, actually, of political events, that one. Of course, Canada's election is on the 28th of April, and then the Aussie election being held about 5 or 6 days later than that. We also had news in the corporate space. CoreWeave, this has been quite an eagerly anticipated IPO. For those who are unaware, CoreWeave, of course, are an AI hyperscaler for GPU cloud computing. Whatever that means, I've
Right.
no
So
idea.
just briefly on CoreWeave. I'm getting like snake oil vibes off of CoreWeave. It seems like one of those companies that says a lot and doesn't not a lot.
Yes, it does feel like that. I mean, I had a bit of a dig around on their website this morning, and I
Oh, but
couldn't.
that was amazing.
Well, half of it I didn't understand, and the other half didn't actually seem to say a lot. So, yeah,
Oh, brilliant.
I'm certainly not convinced about what they're doing. Although it's clear that the market is not particularly convinced by them either, because they were planning this IPO at a price of between $47 and $55 a share, which would have valued the firm as high as $32 billion. They have now slashed that IPO to $40 a share, which now sees them valued at under $20 billion. So
Yeah.
certainly the market taking about as dim a view of their prospects as you and I, Ryan. So we're on the money once again. And then a couple of other things just of note. This morning we have had some data out of the UK. GDP for the fourth quarter was unrevised, pointing to growth of a whopping 0.1% in the final 3 months of 2024. Thank you very much indeed, Rachel, for that one. We also had the latest retail sales data out of the UK this morning. This data for February actually better than expected across the board, with both headline and excluding fuel sales rising by 1% on a month-on-month basis. Although, to coin one of Ryan's favourite phrases, a little bit of a headline for show revisions for dough type thing going
Yes.
on with this print, because the headline metric, the January figure, was revised down from 1.7 to 1.4%, and the core, the ex-fuel metric, that was revised down from 2.1% to now at 1.6%. So taking a little bit of a shine off the release there. And last but by no means least from me for the moment, there has been quite a significant earthquake in Asia this morning. 7.7 magnitude earthquake in Myanmar. Apparently that has shaken buildings as far away as Bangkok in Thailand and Hanoi in Vietnam. The Thai stock exchange has actually given up trading for the day as a result of that. Of course, one just to keep an eye on a few. I'm
I
not
think
sure.
I think the official phrase is like ceased trading, not just given up. But yeah, yeah.
Wow, means to an end, isn't it? Same thing. The a few have put this sort of. Well, I can't. I was going to say shakiness in sentiment, but that's a little bit
Oh
bad
God.
taste.
Oh
This
God.
sort of risk-off move
Oh
that we've
God.
seen over the last hour or so. A few have put that down to the potential to potentially being due to these earthquake headlines. It's not something that I'm particularly buying, but nonetheless, it is, of course, worth being aware of. And if we do
It's
have any.
rattled the markets.
Oh dear. Yeah, oh God. And if, of course, on a more serious note, if we do have anyone listening in that part of the
Oh yeah.
world,
No.
then I'm
Oh
sorry to
yeah.
make light of your situation. I hope you stay safe. But
Oh
yeah,
God.
worth keeping on the radar nonetheless. And before I dig myself a deeper hole, Ryan will, dare I say, go back to you for some sanity.
Oh God! Right, I'm definitely recording that bit. That's the soundbite for the show. Well, thank you very much, Mr. Michael Brown. Obviously, now some overnight news headlines from our dear friend Zach, that's on the slopes, that apparently was partaking in some quite significant après ski last night, by all accounts. Um,
Deary me.
Oh, stop it. So, firstly, on tariffs and automakers, President Trump warned automakers not to raise prices despite looming auto tariffs. The administration is concerned about inflation, but also wants to avoid pass through costs. So, basically, we're going to tariff you and we're going to make the input prices a lot higher, but we do not want you to pass them on. So, be interesting to see how that one works out. Morgan Stanley notes the US dealers have 2 to 3 months of car inventory, suggesting that tariff impacts might start in May, potentially lifting vehicle prices to 11 to 12%. That's according to the Wall Street Journal. Fed Collins, who is a voter, sees tariffs fueling inflation, but is unsure how persistent. Expects the Fed to keep rates steady for longer. Fed's Barkin, who is a non-voter, doesn't
Is he
expect
barking up the
consumers.
wrong tree?
Oh, usually. Stop it. Doesn't expect consumers to bear the full 25% auto tariff, seeing it as a possible one time increase in prices. On China now, President Xi has reassured foreign CEOs that China will remain a, quote, safe and promising, unquote, investment destination. Chinese manufacturers at the Shenzhen e-commerce expo look to new markets, e.g. Russia, to offset US tariff pressure, though replacing US demand is going to be challenging. China issued a second batch of export quotas, 12.8 million metric tons of refined fuel, which is gasoline, diesel, jet fuel, down from 1.2 million from a year prior. The Chinese government has tightened rules on new uh, I'm going to say aluminium plants, but I don't think that's the word I'm looking for, to curb overcapacity and price slumps.
What?
Uh, well, it says alumina, so I'm guessing that's aluminium. Alumina?
Uh, I, I'm hoping that a message arrives from Zach very
Yeah,
quickly here
so
to
am
try and clear it up, but
I.
I don't
But
think
anyway,
I don't think it's coming.
moving swiftly on. Japan, Tokyo core inflation, my favourite inflation number, stayed above BOJ's target. Is accelerating in March on higher food costs. A near-term BOJ rate hike remains in focus. The BOJ March summary: the board is more cautious about U.S. policy uncertainties, sees inflation pressures rising, but wary of timing for further cuts. UK and Europe now. UK retail sales unexpectedly rose for a second month in February, though previous data were revised lower. Britons are saving at a historically high proportion of disposable income. Household energy debt is, quote, worryingly large. I could have told you that. The German GFK Consumer Sentiment Survey that remained unchanged heading into April, with households showing a preference for saving amid post-election uncertainty. And just moving now on to some geopolitics. Russia Ukraine. Trump administration proposed a new minerals deal with Ukraine overnight. Russia's President Putin suggested a temporary administration in Ukraine to enable new elections and a broader sentiment. Oh,
Oh,
sorry,
yeah, I wonder how that one will
settlement.
go.
Yeah, exactly. The Houthis, obviously in Yemen, remain a threat in the region, firing missiles at Israel and threatening shipping despite US airstrikes. Taiwan, China. Taiwan is investigating allegations that SMIC used a Samoan shell company to poach Taiwanese talent. And finally, for me, a couple of bits in corporate and market news. AI, Sam Altman of OpenAI, obviously, mentioned that GPU shortage, bro, quote, responding to questions about new model updates.
I
TSMC
mean,
and
that's
Intel.
not. Sorry, I might be, a bit old-fashioned on this one, but this bloke proclaims that he's going to change the world, and he's running, a company that is at the forefront of innovation. That's no way for a chief executive to be acting, is it? GPU shortage, bro. I mean,
Are
it's just not right.
you wearing a gilet?
I'm not, mate. No, polo shirt today.
Oh, dress down Friday.
Yeah, always got to have a collar though. There are some standards that need to be
Okay, okay,
maintained.
okay. Right, TSMC and
Moving on.
Intel are said to to slow expansion in Japan and Malaysia amid softer demand and tariff worries. Analysts warn that Tesla and Nvidia may lose ground to Chinese competitors in the humanoid, sorry, robot R&D sector. And finally, from me, where was I? What is my final thing going to be? There's too many to talk about. Let's Daimler Truck. Daimler Truck is partnering with ARX Robotics on AI robotics integration for military vehicle platforms. And finally, Deutsche Bank CEO has had his contract extended. The deputy and top exec are leaving in a management shake-up. Deutsche Bank. Oh, is everyone still calling them to go bankrupt at this point or not?
No, I think that's. I think well, certainly Credit Suisse won that race, didn't they, to be the first one
They
to go
did.
under. But no, Deutsche seemed to have turned things around a little bit.
Well, back to you in the studio.
So that's probably put the kibosh on him now.
Yeah.
Anyway, moving on from that, in terms of today, then there are a few bits and bobs on the data docket worth bearing in mind. We do have some figures out of the Eurozone this morning. We have some CPI expectation surveys and then various economic sentiment indicators. To be honest with you, none of that is going to move the market too significantly. In terms of the US session this afternoon at 12:30 London time, we have the latest GDP figures out of Canada. The economy seen having grown by 0.3% on a month-on-month basis in January, up from the 0.2% we saw in the last month of 2024. Although, do bear in mind, of course, that this was before Canada started to get slapped with tariffs from their closest trading partner. So the data is completely and utterly out of date and really not worth the paper that it's written on. Also, at 12:30 this afternoon, we have the latest PCE figures out of the United States, including the core PCE deflator, which is, of course, the Fed's preferred inflation
Great.
metric. Core prices seen rising by 0.3% on a month-on-month basis in February, while the sell side consensus has prices rising by 2.7% on a year-on-year basis. That would be up from the 2.6% that we saw in January. It is just worth noting, though, that at the press conference after the FOMC meeting last week, Fed Chair Powell said that the committee estimated the core PCE number in February would be at 2.8%. So if we do get what you would at first glance think is a hot number, it's probably still going to be broadly in line with where the Fed would
Yeah.
expect
Yeah.
it to be.
Good
And
color.
they
Good
are
color.
Thank you, mate. And they are firmly on the sidelines in any case, so I don't think this is going to materially move the needle in terms of the policy outlook. And lastly, just in terms of US data, we do get the latest consumer sentiment figures from the University of Michigan at 2 o'clock this afternoon. Their index expected unrevised at 57.9. In terms of other things to keep an eye on today, of course, we do have that call, or that supposed call, between Canadian Prime Minister Carney and US President Trump. So we'll keep an eye on that, as
Just
well as
remind me, is Carney allowed to speak in Parliament yet or not?
no, not yet, not yet, not until next month. So do bear in mind any potential headlines on that front. Also, of course, the usual geopolitical nonsense, as well as Trump being on Truth Social at some point, I'm sure. We do also have scheduled speeches today from the Fed's Bostic and Barr, as well as the ECB's Muller and Nagel, which may be worth a watch as well. And just moving into the weekend and very briefly ahead to next week, of course, do bear in mind the potential for gapping risk over the weekend, which is really ever present at this moment in time. Also, do bear in mind that the UK, our clocks are springing forward this weekend, which means that the London New York time difference will be restored to its usual 5 hours
So
from
just on
Monday
this,
morning.
and it is it is very small thing to have a bit of a beef about, but I do have a beef about it because you know me, it's the
Oh,
little things
God.
in life, a bit like myself. But me and our good friend Tony Hines, a market veteran that he is, we were talking about this the other day. For the years that I was trading, there was always just 2 weeks difference between the US and UK when we got to leave work early at 8 o'clock in the night. But this has now been what, 3 weeks?
3 weeks, yeah.
Why couldn't that happen when I was trading? Being
I
able to
don't
clock
know,
off
but
on.
I must admit it is quite nice. You know, when the market closes at 8, you get a little bit more of
No,
an
this is what I'm
evening.
saying. It's
You
great,
know,
but when I was trading, the longest it lasted, and Basie, who's listening, he'll back me up on this, and Dunny as well. The longest it ever lasted was 2 weeks, and now I'm not trading. As
of
Judith
all
Chalmers
the
just said, it's woke nonsense.
Well, there we go. Well said, Zach. Of all the things you could have got on your soapbox about this morning, I was not
It's the little
expecting it
things,
to
you know
be
me.
that, but fair enough. So, yes, of course, sadly, we will then have to wait until November, I think, for us to get our slightly longer evenings again, which is when we next have a 4 hour time gap. And lastly, do just bear in mind that next week is going to be a very, very busy week for the financial markets. Of course, we have this Liberation Day on the 2nd of April. We also get the usual round of PMI surveys to kickstart the month. The manufacturing numbers will be on Tuesday. The services figures will be on Thursday. And then next week, of course, wraps up with two things, actually three things, sorry. The first is the US labour market report on Friday. The
and
second is a speech from Fed Chair Powell. And the
and
third is a beer with Ryan that he's paying
yes.
for.
Whoa,
And
whoa, whoa,
that's
whoa, whoa, whoa! Don't throw me under
and
the
on that
bus.
note, that is
That's
your
not
lot from me for the
that's not
week.
fair. You can't do that. But yes, but Michael is very very right. Anyone that's in the UK, London, or if you're abroad, and you want to fly in, please do. But join me and Michael Brown for the second instalment of Non-Farm Pints, which is going to be in Old Street on next Friday. But that's it from me and Michael this week. And listeners, thank you so much for tuning in. Whatever you're doing this weekend, have a great one. Stay safe. Look after yourselves. Much love, and we will see you on Monday.
Indeed, we will. Bye for now.